Good morning, everybody. All ready for a nice recording on the second part of Learning Unit 6. So as we know, Learning Unit 6 is all about manufacturing enterprises. So the first part that we deal with is the general ledger accounts, where the preparation of the final balances is all done. And then after that, the next section is preparing the statements. There are 2 of them, as well as the accompanying notes, of which there are 4. So I want to take you through an activity right now in which we're going to learn how to do the production cost statement and the trading statement, and then the following 4 notes. Cost of direct materials, cost of direct labor, factory overhead costs, and lastly, the cost of the finished goods sold. So just give me a moment while I share my screen for you. Won't take long. Right, here it is. Let's just make it nice and big. So this is a typical kind of a question. There are many of them to practice in the textbook. Right, so you can do plenty of these. So let's always have a look at the dates. Dates are very important, as you know, in accounting and financial management. So you'll notice there are 2 important dates here. Let me show you what they are. Firstly, we have some balances for that period, July 2022. Then we have some transactions which take place during the next year. So this will get us to the end of the year 2023. We wrap up at the bottom with the balances again at the end of 2023. So now let me just explain to you about the balances over here. These ones at the older date are obviously going to be your opening balances. Then the transactions take place during the course of the next year, and then we wrap up that year with these amounts. So these will be your closing balances. So we are going to add in opening balances and always subtract closing balances in the preparation of our notes and statements. Okay. So there is a very specific order that you follow here when you are doing this. So let me type this up for you over here. We're going to start with the notes. So first of all, we're going to do note 1, which is direct materials, followed by note 2, direct labor, then note 3, factory overhead costs, then the first of our statements, the production cost statement. Then we're going to do note 4, which is the cost of the finished goods sold, and then finally the trading statement. So I'm going to take you through all of those in the correct order. So first up, we want to do the direct material cost. So I will refer you to the textbook for the format of this particular note, but let's see what information we have relating to direct materials. So we have this here, the opening balance at the top. Here we have another 2. Don't forget also that direct materials may also be referred to as raw materials. So we have a credit purchase and a cash purchase. Here's another one that will increase the cost of the materials, customs duties. Then keep going down here. Here's another one, freight. And lastly, the closing balance at the end. So those are the things we need to write up in the note. So all notes require a heading. So I'm going to just show you how we're going to do that. There's my heading. We start with the opening inventory at the top. Then I'm going to add on my purchases. Remember, there were two. There were the credit purchases for the 1,750,000, as well as the cash purchases of 209. Add in the other two elements of the cost, which was the freight and the customs duty. Add that together gives me 2,628,000. However, I'm trying to find the cost of the direct material, and the cost relates to the amounts of the materials actually used. So let's see how this is going. We started with some opening stock. We bought 2 more lots. Our cost increased as a result of freight and customs duty. However, at the end of the period, down here, we still have stock of the raw materials. That means we haven't used them. So if we haven't used them, we can't include them as the cost. That's why we subtract them. And then we're going to land up with our final answer here that we want. So the cost of the direct materials used during the 2023 year is 2,363,000. Okay, I've just seen something over here. Don't worry about that. Sorry. Updated the question, but all of the other information remains the same. So this will actually be, let me just overtype it in there. It's 2023, but it doesn't change anything. Okay. Then next up, we're going to go and do note number 2. This one, super, super easy. Everybody will get 100% for this. And that is the cost of the direct labor. So let's just vary the color for the different things. See here, these 4 items. The direct labor are the staff, the workers who work in the factory, directly responsible for making the product. So their wages, as well as any other contributions paid by the business associated with the direct labor. So the most likely ones are pension, medical aid, and unemployment. All we're going to do here is we're going to write those up in the one note and then get the total. So in your question, should it come up in the exam, you will put as many or as few of those items in as are in the question. Okay. It might also be presented slightly differently. It might say wages, then in a bracket, direct labor, maybe 75%, indirect labor, 25%. Then you would just know how to do that, find the relevant portion for direct labor. Okay. So we're going to write up those 4 amounts. And remember here, don't think I'm going too quickly. We don't need to do any calculations. I'm simply copying and pasting the values as from this list. Okay. You do have many to look at in the textbook. So I'm going to begin the note with a heading here, direct labor costs, and I'm going to write up those in a list form. So the factory wages, the pension, the medical aid, the UIF. Notice here that these are paid by the employer. Just look out for that, because sometimes the question might be phrased or presented slightly differently. What happens if the contributions are by the employee? Then they do not form part of the business's cost of direct labor. So if it says by employee, you would not include it here. We just need the portion by the employer. So we add those 4 items together, and that gives us a total of 541,000. Okay, let's carry on. We want our next note, which is your factory overheads. So just think about how we did this in the ledger accounts. You also did this in great detail in Learning Unit 4, where we were categorizing the costs. It comes out again in Learning Unit 7 with job costing. So what are your factory overheads? They form part of product cost or manufacturing cost. Okay. And it's your indirect material, indirect labor, as well as any other factory expense. So what I recommend here, just as in the ledger accounts, is that you always start with your indirect labor and indirect material in case you forget those. So let's find them here. Here is the indirect labor. So those are any other workers in the factory, but they are not directly involved in the production of the final product. Okay. So all that we dealt with in Learning Unit 4, no need to go back to that again. So we have our indirect labor. Now we need to sort out indirect material. So if you have a look over here, here are two items that mention indirect material. So one of them is the amount purchased, the other is the amount issued to the factory. Okay. So remember what we're doing here. We're trying to find the cost of production, meaning that the material or the workers had to be put into use. So the fact that we bought indirect material does not necessarily mean that we used it. So we will not be writing that here. However, in the general ledger account, you would obviously have to put that there. So this next one says issued to the factory. Now, what does that mean? Yes, you know, if it's issued to the factory, it means it's used. And if it's used, then it's a part of the cost. Another way in which you can get this one presented to you, if you have a look at the various questions in the textbook, it might actually say this: consumable stores. Then you would use that amount. So I've got the first two items for my factory overhead cost. So I'm going to use the indirect labor, which is the 122,000. And I'm going to do this one over here, the 230,000, because that is the cost of the indirect material. Then I need to have a look for any other factory expense. So we're just going to start at the top of our list of transactions, work our way down, tick off as we go along, and see what we're left with. Right, so we're going to have another category over here, factory expenses. So here's one, insurance. What are we going to do about the one for the office? Think carefully here. If we were doing the ledger accounts, that would be a profit and loss item because it's a period cost. Remember, period costs are non-manufacturing cost or non-production cost. We are trying to prepare a production cost statement. So we must only obviously include product-related costs. So we're not going to do the amount of the office insurance, only for factory. Then you see similar here with the rent. We are going to look at the factory, but not the office. Keep going. What about something like the finished products? They will rather appear in the trading statement, so not using them just yet. Marketing, think back here to what kind of a cost that is. That is a production, non-production cost, sorry. It's a period cost, non-manufacturing, so we are not going to include it. In particular, it would be a marketing, selling, distribution cost going to profit and loss. Depreciation, because it says factory, machinery, yes. Should it say office equipment? No, because that would be a period cost again. Then these next ones here, stationery would be an admin cost, period cost, no. Salaries for office staff, no, once again, period cost, non-manufacturing. That would be profit and loss general ledger. Okay. Then same here, selling, and admin costs. Finally got the word out. No. The telephone for the factory. Yes, but once again, not for the offices. The factory, water and electricity, absolutely, but not for the offices. So we're going to take these items, we're going to include them in your factory overheads note. So here we go. Okay. Don't forget these two here. Those are the ones to look out for. Indirect material, indirect labor, plus those other ones that we went through. Add all of that, and it comes to 791,000. So there we've done note 1, 2, 3. Next up is the production cost statement. So let's make sure everybody is going with the flow here. Note 1, done. Note 2, done. Note 3, done. Okay. You can't do note 4 because you need to have the value from your production cost statement. So now we are going to include only the costs incurred during the production period. And which year is that? It's the 2023 period. Okay. So I'm going to write up those 3 things: direct materials, direct labor, factory overheads. But we need to go and have a look if there were any costs carried forward from the previous period. So this is why I'm looking at the top under the opening balance here. Do you see this item there? Work in process. That is another term for semi-finished goods or unfinished goods. So that means that production was started during the 2022 period, but wasn't complete. That's why it sits in work in process, unfinished. However, during the 2023 year, that work is completed and sold. And the final thing we need to check is there any unfinished work at the end of the period? So I pop down to the bottom. Yes, here I see it. Work in process at the end of the year 2023. So I'm going to have to exclude that because it doesn't form part of production cost for the year. I'm going to add in my current costs of direct materials, direct labor, factory overheads, and I'm going to add in that opening work in process and write that up in the form of the production cost statement. So let me show you how to do that. Nice and easy. Okay. There's a heading that says direct cost. Consists of the 2 components, direct materials, direct labor. And where are we getting these values here? Those values are coming straight from the last line of each of the notes. So let me just refresh for you there. There, this one, 2,363,000 for direct materials, 541 direct labor. So we're just transferring those into the production cost statement. Note over here, the notes, yes, note 1, note 2. Add those together. So those direct material, direct labor is your total direct cost, which we write up there, of 2,904,000. The final item is the factory overheads. And I see it doesn't necessarily have to be sitting in there. Obviously a tab got hit there by mistake. So put that at the edge. Factory overhead costs is your final part of your manufacturing cost. And that's the total amount from note number 3. So what we're now going to do is we are going to find our total manufacturing cost. So we're going to take the direct cost of the material and the labor, to which we're going to add the factory overhead costs. Those are going to give me this total down here. Notice what I call it, total manufacturing cost. Then NB, the two items over here that I've just discussed. We're going to add in your opening work in process from your opening balances, but take out the closing work in process because it does not form part of the cost of this year. Final line gives me cost of production of the finished goods. There we have it. So during 2023, it cost $3,745,000 to produce the finished goods. Right, nearly there, not much more to do. Let's tick off as we go along. Things are starting to look good. Done. So what's next? Note 4. And note number 4 is going to be the cost of the finished goods sold. So notice we distinguish between cost of the finished goods produced, and we've concluded that in our statement. Now we move towards the trading account, so we have to focus more on the goods sold. So we're going to come and have a look to see if we can find any information to do with finished goods. So let's start at the top. Yes, here we go. We've got finished products with the blue circle at the beginning of the period. Anything else to do with them? Yes, we'll have some at the bottom. We'll have a closing stock down here of the finished products. Stick with the color coding with the turquoise circle. So we're going to start by having opening stock. We're going to minus the closing stock. And then, this is the reason we actually did this production cost statement. Okay, we're going to add that cost in. So just remember, we are a manufacturing business here, not a retailer. So the trading statement for a retail business is very simple. Remember what they do is they buy in finished products, they add a markup onto cost, and they sell for more. So there we say sales less cost of sales gives me gross profit. Only difference here for the manufacturer is we're going to say sales less cost of finished goods sold. So I need to prepare this note before I can do my trading statement. So let's do that. My cost of finished goods sold, I start with my opening stock. I'm going to minus the closing stock. This, everyone, is the important item here. I'm going to add the cost of the finished goods produced. Does this number look familiar? Well, I hope so. Yes, you've seen it before. Where? Have a look down here. See this number coming, the last line from the production cost statement. That was the cost of the finished goods produced during 2023. So I'm going to take that. Let's see, that will fit. Yes, there we go. Go straight up here and pop it in there. So add that to my opening stock minus the closing stock gives me cost of finished goods sold of $3,790,000. Back up here. Note number 4 is done. We're on to the final statement, which is the trading statement. So I've got half of my information. I've got the cost of finished goods sold. What I need is sales of the finished products. So let's see if we can find anything here. Yes, of course we will. Let's use running out of different color options. Let's go blue. So over here we've got sales of finished products. Always please look out for sales returns. because that will reduce the trading statement. So here we've got that. So I must not forget to minus the 27,000 from the 4,600,000. That gives me the term net sales. Let's type that up. That's important here. We are including net sales. So your sales less your returns. Then we need to subtract the cost of the finished goods sold. That will give us the final thing we're looking for of gross profit. So let's see in my trading statement. Here we are. Everything is nice and sorted. There is my net sales, from which I must subtract the cost of the finished goods sold. Remember where that came from. Note number 4. Then I subtract and I get 783,000, which is my gross profit. And that's it, everybody. This section is now completed. Let's hope everyone will get 100% for this in the exam. So thank you so much. I'm going to stop sharing in the recording. Please learn this one together with the general ledger accounts. Then that is Learning Unit 6 totally wrapped up. So stay tuned for some more from Learning Unit 7.